Anticipate, don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Welcome to Market Makers, your home for tomorrow's TA today. Often imitated, never replicated, the geopolitical space is heating up globally, not just here in the US, where we had former President Trump last week square off with current President Biden, and Biden's mental decline was on display for the world to see. Now, this isn't a surprise. If you live in the US, you've already known this for years. During the pandemic, they literally hid him in the basement. They don't allow him to talk much. And the format that Biden's team chose for the debate was possibly the worst format they could have done. He slurred his words. He got lost in his train of thought. He looked totally disoriented the whole time. He had to be helped on the stage, helped off the stage. He couldn't coherently put two sentences together. Now, I'm telling you all this because this is a populist right movement that's happening around the world and is going to affect the markets. Bloomberg's really upset what's happening in France. They keep running headline after headline about the far right in France, the far right in Germany, set to win sweeping elections. Well, in France, you have Le Pen's party. And when you look at their platform being called far right, it's kind of funny. People are revolting. Gives me a glimmer of hope for human civilization and the fourth turning that we're in. It's like Frodo approaching Mordor with the One Ring. We have a glimmer of hope in this uphill battle against the elitists and the control system, the one world government they want to put upon all of us. People are revolting because their standard of living has been in decline with record inflation. They see their centralized power authority governments propping up wars around the world. You have the biggest wealth divide in human history between the top 10% and the bottom 90%. People can't afford groceries. People are tired of unmitigated immigration, open border policies into their country, which destroys the social cohesion and fabric and culture of that country. People are tired of the rise in crime in their country, and you're seeing people globally revolt. Again, started with Maloney in Italy. It's now spreading to Germany. Olaf Scholz, a complete ponce over in Germany. His party's polling at the worst levels ever in Germany. And now you have the National Rally Party in France. You already had Javier Milei in Argentina. And of course, now you have the ascension of Trump, love him or hate him. He's a finger in the eye to the system of power in this country. And so this is what the elitists fear. This is what the elitists hate. And now they're talking about the impacts of the market. I was watching Bloomberg this morning. They kept talking about bringing these money managers on, talking about, well, if Trump gets in, I'm really worried about inflation because he might do tariffs on China. That's really inflationary. Not one of them mentioned the $2 trillion deficit that we're currently running, 7%, the largest deficit in U.S. history outside of World War II, or the fact that we're printing $1 trillion in new debt every 90 days. That's not inflationary. I mean, it's literally the definition of inflation, inflating the money supply. So the liberal media complex, Wall Street, Silicon Valley, they're all petrified right now what's happening around the world. But I just want to say I'm proud of everybody. I'm proud of all these viewers in the country. I'm proud of all the viewers worldwide. You need to take back control of your life. Nobody should be telling you what to eat, what to drive, what job you can have, and how you can live your life. You are an individual and you should pursue your own freedom, and especially your financial freedom, which is what this show is about. So guys, we're going to go look at the markets because I have some interesting things to show you. First of all, the thumbnail says GFC 2.0. I want to show you how we're stacking up versus the GFC because this is really fascinating to me. And I think a lot of you will find this really fascinating. And if it plays out this way, this is going to be some awesome tradable moves in the marketplace. So Lee, long enough political rant. Let's go ahead and start the show. All right, guys, as always, if you want to trade these Ponzi markets, check out SimpleFX, where you can trade Bitcoin, equities, commodities, Forex. Get our Market Makers VIP link up to a $5,000 instant first-time deposit bonus available to trade with instantly. Our link in the video description. And if you want to trade all the cryptos with no KYC, no VPN, check out Bitunix, Market Makers VIP bonus available there as well in the video description. Hang out with us on the Discord, guys. That link is in the video description. Message Lee with any questions about how to join Telegram. Everything in the video description. This video should be timestamped for your viewing pleasure if Lee's doing his job, which, he's Welsh, so it's 50-50. He could be out with the sheep. But let's go ahead and look at the 10-year. So the 10-year is on a massive pump. Now, if you listen to the media, depending who you listen to, this is because global uncertainty about elections, yada, yada, yada. I look at this slightly differently. USD/JPY, the Forex pair, is extremely weak yen right now. We're north of 161.5 at the time of this recording. I looked just before I started recording. And the Japanese hold over $1 trillion of our debt. There's a fear out there as well that if they stop buying our debt, or worse, start selling our debt back onto the marketplace, yields will have to rise even more to be competitive to lure people to buy our debt, okay? So that's part of what's driving the yields higher. Remember, overall, yields are an expression of future growth expectations and the strength of the economy. Eventually, when this market rolls over, when the economy rolls over, because the economy and the market, two separate things. But when the economy rolls over, yields will drop. They will drop faster as the Fed cuts rates. I think we'll get back down to zero again because the Fed typically cuts 500 basis points every single boom bust cycle, okay? Twice now in the last 20 plus years, they've had to do this and go back to zero. So where we are now is 4.47, which is really 4.48. Yields are on a nice pump. You're going to have key resistance at that psychological level of 4.5. So you want to watch that level. Let's go ahead and move forward. Something I want to look at too is the DXY. Haven't had our breakout Wyckoff trading range. We're above 105.88, but you need to get that breakout above 106.5. You get back above 106.5. It's a lot of pressure on the markets. I think it's going to happen in the summer top and drop. Okay, we're going to look at that on the next chart as well. Let's skip the Dow for right now, but let's look at this. Okay, this is something I was talking about on Discord. On the Discord, guys, I make a couple extra videos every week. I think last week I did 3 videos. This is something I've been looking at, and this is the title of the thumb, or the title of this video, GFC 2.0. Now, you guys know, if them watching the channel, and especially everybody on the Discord, I've said all along, this looks like a hybrid cycle of .com and GFC, but the fact of how close we are tracking to the GFC should scare some people. It doesn't scare anybody on Wall Street, but it should put some caution into your lungs. But let's talk about a couple of key things here. The similarities of GFC and GFC 2.0. What was the peak funds rate back in the GFC? 5.25. What's the peak funds rate now? 5.25. I want to draw your attention to the immediate price action that we are undergoing. This was the GFC price action. Goldman Sachs last week put out a note saying that July 1st to July 14th is the 2 most bullish weeks of the year going back 100 years in the market. So sure enough, you guys know what I like to do. I like to test it. So I went back at least 5 years. I covered this on our Discord video. I went back at least 5 years. Sure enough, we tend to rally 5 to 6% in that early July period. That July 1st to July 15th, 16th, right in that range. We did this in the GFC. We went up 5% as soon as we had the turn of the month. We went up 5%. We made a local top. And guess what? We got the summer drop. Now, when else did we do this? In recent history, last year. Market top July 27th and then bottom. In this case, the market bottomed August 16th, and this was a 12.5% drop. Remember, the average decline in the summer tops and drops the last 5 years in the current market is 10.5%. So I think we're going to get the summer top and drop. The curious part, the interesting part to me, is do we get this little baby rally? Do we get this 4, 5, 6% rally up into mid-July? Now, this week is a short trading week. We have a half day on Wednesday. I think the market closes at 1. And then we have Thursdays off, national holiday here, Independence Day. Sorry to my UK brothers, but Independence Day. And that's where, the market's going to be very light volume this week, especially on Friday. We have unemployment number coming out Friday as well. So we have some market data coming out this week. But guys, this move is exactly what I think we're going to do. Hence the GFC 2.0 title. Whether or not we get this rally, we shall see. We're going to look at it on the current chart. But either way, you're getting your summer top, you're getting your drop. I think it'll be 10% at least. 10.5% has been the average. Get this summer drop, and then what happens, guys? Then what happens? This brings us to similarity number 2 of the GFC 1.0 and the new and improved GFC 2.0. When did the Fed first cut rates back in the GFC? September 18th. When is the Fed meeting? You cannot make this shit up. When is the Fed meeting this year in September? September 18th. We have a July meeting. That's at the end of July. I don't think they're cutting rates in July. I've been saying I think the first rate cuts in September, and it will literally be the exact same day they cut rates in GFC 1.0. What did the market do after the first rate cut? It rallied 6.85%, 17 bars, 23 days. It put in a new all-time high because rate cuts are bullish. Rate cuts are bullish. And then what did the market do? The market then declined 57%, falling all the way down to the S&P 666 in the spring equinox 2009. Something else I want to talk about real quick is people say, but Brendan, this is an election year. And I've seen people cherry pick data and say election years are always bullish. Well, election years, when you go back 100 years, you're going to have a lot of election years. But when you look at market bubbles, they are historical outliers. They're only supposed to happen once every generation or so. But we've had 2 bubbles now in the last 20 plus years. This is the 3rd bubble. And when you look at the election years since the turn of the new century, we had an election in 2000. The market topped in March of 2000, declined double digits. We had an election in 2008. The market topped, when did the market top here? October 2007, declined double digits in an election year. We had an election in 2020. The market dropped north of 30% in an election year. What I'm getting at is we have had 6 election years since 2000, and 3 of the 6, we've had drops greater than 30%. And as the drops played out the following year, you had a 50% decline, a 57% decline, and I think the pandemic was a 38% decline. So 3 of the 6 have started a drop that went down north of 35%. So it doesn't matter that it's an election year. What matters is what happens in the economy. The market and the economy are 2 separate things. We can look at history. We can study history and see how this has played out in the past. It doesn't guarantee it plays out the same way. But this move, guys, the summer top, the drop, we've had summer tops and drops the last 5 years in a row. Last year was July 27th. 10.5% decline. And now we look at the GFC, did the exact same thing. Mid-July, dropped 12.5%, rallied back up. First rate cut, ran up for 23 days, almost 7%, and then declined. I think the exact same thing happens again. I think we get rate cut September 18th. I think the permabulls with social media and how everything's portrayed now with FinTwit, or what is it called? FinX now, I don't know what it's called. But at any rate, with all the social media available, I think you're going to get that initial rally after that rate cut, and then you can get the stronger and longer decline. We shall see. That's just what I think is going to happen. You may think something different is going to happen. Let's go ahead and look at the current price action. Looking at ES here on the weekly, 5,520, the S&P futures, guys, 5,520. It's not even moving. It's very stuck. So I think the volume, I haven't looked at the volume today, but I think it's probably really low. I think it's going to be low this whole week. But we had some key timing cycles also kick in. So I want to look at this from a weekly perspective. Let's go to our October 2022 low. If we go to the current candle, 90 bars. What is 90 bars? Does that mean anything to anybody? As a geometric trader, remember Charles Dow took a circle and he divided that circle into pieces, which is how you get the Dow retracements. 1/3 of the circle, half the circle, 2/3 of the circle. W.D. Gann used geometric shapes as well, such as the circle. 90 bars is 1/4 of the circle. Okay. In other words, a potential pivot point. Now, I like to track a lot of my pivots based on geometric shapes and Fibonacci sequencing, but I like to use the 3-day chart as W.D. Gann did. And if we look at this from the low up to the current bar, 144 bars. Now, again, that is a Fibonacci sequence number. That is also the completion of a harmonic cycle right on the current bar that you're on now. So whether or not we get this little spurt back up, maybe at the end of the week or going into next week, bringing us to mid-July, we shall see. But you're at a turning point, guys. You're at a turning point for a key potential trade opportunity. And we're going to look at this here zoomed in as well. So let's go ahead and look at the actual E-mini on the daily chart. Here's our long-term resistance that we have had, covered this many times, so I'm not going to waste your time and go back to it. 1618, 5562. Not a single candle close above 5562. You have your three-wave top that has now formed as well, and you have price literally just floating, right? This is the current status of the market. We had a down thrust today. We got below 5510. This is your fractal low at 5510. You're currently at 5521. So what does this mean? How do you trade this? Well, I'm looking at this from this perspective, knowing that we have these two historically bullish weeks. As long as we just go sideways here, I would not be surprised later this week into next week, taking us to mid-July. Remember last year, we got to July 27th. If we can hold these ranges, right? If you can hold these ranges, I would not be surprised to see a move up to a higher level. Does it have to happen? Absolutely not. If the yields keep rising, if the DXY breaks out, if there's some new political turmoil that happens, you could see this break down. And those two historically bullish weeks won't mean diddly squat, which is why you need to look at your support levels here. 5510, you start breaking down and closing below 5510, then I think your retracement is starting. But as long as you're going sideways and chopping, that ability to move up 4, 5, or 6% has to be understood, because the market's done this the last 5 years, big on market history, the last 5 years, and did it in the GFC as well. The next key level I would be looking at, if we were able to break and close above 5562, is the 5700, the 200% expansion from where we drew the Fibonacci extension, okay? So that would be the next key level. There's levels in between here and there as well, depending on this trading range. This trading range just expanded today, so I'm not too keen on these levels yet. But you'd have your key psychological levels, of course, of what, 50, 5550, 5600, 5650, 5700. You can take it in 50-point blocks, but you're chopping sideways. Nothing new yet here to report. Looking at the daily time frame, MFI is still bullish. Maybe we're putting in a W bottom here on the MFI. Let's see if we do something like that. Momentum rolled over on the MFI. Let's look at this in more current time frame. Let's drop this down to the 4-hour. 4-hour is getting oversold. Momentum is bearish, but look at the line. You're holding that line, right? And you can actually take this here on the 4-hour time frame And even bring this back to that fractal level. That's your 55.17. So you're holding this line, you're grinding sideways. As long as you continue to stay above 55.10, some of you may just call it 5,500, right? Easier to remember that. But as long as you can stay above this, you want to watch and be prepared for this next upswing. If we get an upswing in this 2-week period, which again, last year ran for longer than 2 weeks, it ran till the 27th, because there may be some higher trading opportunities that present themselves. As of right now, 55.62 is your key resistance level here on the ES. And at any time, for any reason, this could start to break down. I don't know if it's going to happen during a weak light volume trading week, right? I don't know if that's going to happen, because it's going to require big money to step in and do some selling. So we may just see some floating and some ranging this week. We shall see when that actual breakout triggers, if we get one, or the breakdown. But those are your key levels, guys. Let's go to move forward. NQ, same exact pattern, guys, is presenting, as you can see. Same pattern presenting your big 3-wave top, right? So again, NQ's floating at 19,964. If the S&P were to break out, NQ is going to break out as well. This is the NASDAQ futures. And then, of course, if this starts breaking down, the key levels you want to watch here, 19,695. You're at 19,961. This is your key level. If you were to do this move, as money's reshuffling in the market, if you do some type of move like this, this is a level you want to watch for potential trade. Same as if you break out to the upside, right? If you do end up breaking out to the upside, if you're forming a W and you get your nice little mid-July rally before you put in the summer top and drop, key level you need to break, 20,304. Got to get above 20,304. I position trade, I swing trade. I'm looking at this. You're not at any extreme here. You're literally floating in the middle. You're not below key support and you're not above key resistance, right? So you're just floating in the middle. So patience is key here for me. Money has been reshuffling around these marketplaces, and you can see it in the big tech. Some money's getting pulled from one and shoved into another. For instance, Tesla is moving. Looking at the MFI, bullish territory, momentum bearish. This is going to be the same across the indices as they grind sideways in these range-bound markets. Speaking of NVDA, you hit our 1618 beautifully at the 140. You sold back off. You tried to rebound. You came up to 126.76. Resistance held beautifully, but now you're just grinding sideways again. 123.18 here on NVIDIA. You look at your MFI. You're coming back to the neutral territory. Momentum is still bearish on the daily time frame here, but this is going to be a key one to watch. And again, you could be putting in or attempting to put in some type of little baby reversal W here that may take you up to a new level. Until it does, 126.76, 140.67, your two key resistance levels. And beneath you, you want to hold 115. Okay, you want to hold 115. If this starts breaking down below 115, you got 107 and 100 below you. Look at Tesla. So we've been talking about this for a couple of weeks. We've been talking about this on the Discord. Tesla had our market makers caterpillar here very constricted. The strongest constriction that we've seen in a couple of years on Tesla. And I told you this could break up or down. You were hovering around key resistance. You broke up through it at 210. Where is this going? And why is it doing this? It's doing this because as money shuffles around the market, again, my opinion, as money shuffles around the market, it's looking for what it deems to be undervalued. Tesla is down bigly from its top of over north of 400, right? You got down, you were cut more than in half on Tesla. So you have some accumulation happening in Tesla. It's breaking back out. It's at 210 right now. Let's go ahead and pull this fib here from a Fibonacci perspective, see where this could go. That 1618 is at 218. You're at 210. See what happens if you get up to 218. Just above that would be 230. But, you got to have a really strong momentum to bring you up here. The daily, you're already hitting overbought. Doesn't mean anything. You could be embedded overbought for a while if this wants to keep moving. Momentum is strong. There's interest in Tesla right now. But at some point, you will hit a top and at least get a pullback. And potentially that is where you will either top or base and move up to the next level. So keep your eye on Tesla. So look at Bitcoin. Bitcoin is still struggling mightily here in our lower corridor of our fractal corridor pattern. You're below the 50 50 still. You're currently priced at 63K and some change, 63,003 to be specific. But you're below the 50. You're in bearish territory. But if you get a little rally in mid-July, up to mid-July, potentially into late July, then you want to see where Bitcoin could go to, right? Because the key levels you want to watch on Bitcoin, again, it could just break down if the market breaks down, but the key levels you want to watch on Bitcoin are going to be like this. Your 618 right at 66.8, right there where your 50 is, and 69K like we talked about last video, 66 to 69. If you get any type of bullish sentiment returning for a couple of weeks in the marketplace, you will see potentially crypto move up as well. And you want to watch these levels because this could be your last level before the next breakdown to the downside, okay? And our targets on that downside, do I have the larger chart here? 3-day chart. Oh, that's Solana. The targets to the downside, been over this many times. If you take out that 57.5 and start getting closes down below, guys, going to be looking at 52 and down here at that 45, 46K level if you start to break down. But again, you could be rallying first. Oftentimes, this is called a dead cat bounce, right? So you have your three-wave pattern that formed. Where is my ABC? You have your three-wave pattern that formed. Here's your A. Here's your B. Here's your C. You came right back down to the neckline, and then you get some interest because you're undervalued or whatever, and then you pop back up, oftentimes called a dead cat bounce. That's why you want to watch, see if this makes any type of lower high and then breaks back down, okay? You want to see if that breaks back down, and then we're going to look at these lower level targets. And again, I expect this to be in confluence with the U.S. Equity markets. If we look at Solana is at 148 right now, same as Bitcoin. It is popping back up. But again, the trend, you're high, you're low, you're lower high, and now you're trying to put in a higher low here. So you want to watch where Solana can get to. Let's go ahead and take this fib off here because you found your support there just south of 129. If we look at this from a Fibonacci perspective, pull it from the C wave down to your current low. You want to see if Solana can get up to 163, 174. But again, that would be a sequence of high, low, potentially lower high, okay? I'm going to watch Solana in conjunction with Bitcoin. I'm watching Bitcoin in conjunction with the U.S. equity markets, Bitcoin being a great liquidity barometer. If the markets are going to rally, maybe Bitcoin pumps up substantially first, or vice versa. It could also follow what the markets do. So we want to keep our eyes on these things and see how this plays out, okay? Key support, you want to hold 113, right? You want to hold 113 on Solana. If we look at the Paris market, the CAC, the Paris market, had a nice rally, gave it back up today. But overall, guys, when you look at the Paris market, because I had a request for this on Discord, so I want to start covering it again because I like to trade the Paris market. We came right down to our target of the 1618, almost a 200% expansion to the downside. And now you're sitting right at the 1618 at 75.85. So this to me, right now, you're either going to be accumulating or setting up for distribution again. And you have this big block of candles over here for support. So you made your low, you made your high, you pulled back, you try to bounce back up. I anticipate some type of accumulation or distribution pattern. You need to break out above 77.30 to get more upside. And then you're going to be looking at 78.50 going up from there. And the key resistance right there is going to be 78.50, 7,900 right in this range when you start hitting the bottoms of all these candles. So you want to see if you can do that move. If not, you could be going sideways for a while, just accumulating, coiling, if you will, in the marketplace. MFI, you didn't get oversold, so you're still in bearish territory. Momentum's trying to rebound, but you can see it in the price action. I expect wave movements here. Patience would be key here on the Paris market. HSI, Hang Seng market. This was a request on our Discord, and I thought I'd share it here because I've seen a couple in the comments asking about this market. So to speed things up, I went ahead and drew the W that I showed them on Discord. But this W pattern, and keep in mind, this market is down 57% since January of 2018, right? 57%, 55%, nope, 57%. So thing I'm doing here from wave 4 up to my wave 5 of the W pattern. That's how I get my targets, guys. 1-6 hit beautifully, 14,692. Actual price got to 14,623 within $70 on a $14,000 asset. You hit the 1618 beautifully. Now, I was being asked, is this a bullish pattern? Because I know there's traders apparently on YouTube, because this is why the question came up in the live stream. There's traders apparently on YouTube saying they're buying the Hang Seng. This is bullish. You're in a pattern right now where you originally tried to accumulate at 18,204. You came up to 22,003. Look at this. You made your big three-wave top. Then you cratered back down to the 1618, spiked back up, sold back off, double bottom once again at the 1618 at 14,692. I don't like this market largely because China lies about their numbers. Nobody actually knows the economic figures. But bigger picture, could this be a bottom range for the Hang Seng, the HSI? Could this be a bottom range where you're just accumulating? You have your low, you have your high, you have your equal low, but you have a lower high. This could just be a large wave pattern that needs to spiral, needs to accumulate and start making maybe some higher lows, and then maybe look for a move to the upside. Do I think the HSI is going to rally once the other markets top and drop? I mean, it has time. Remember, all these economies are tied together. China is what, the second largest economy in the world. They're all tied together. So until we really start getting a slowdown in the US, you can get some gains on this market, especially if you can hold this low, this higher low up here. So I'd want to stay above 17.2. If you can hold above this and maybe get a move to the breakout to the upside. But overall, guys, this market, just like all the global markets, once we get the summer top, the summer drop, the rally back up, that is when you could see this breakout to more upside. And then at some point, we're going to peak, whether it's in November, just like we did in 2021, whether we make it to the spring equinox of 2025, but there will be longs to be had. But for me right now, this is something that I would want to see form a base and start to make a bullish pattern, because right now you've just had pumps up and then rips down, right? Pump up, rip down, pump up, and you're starting to rip down here some. So see where this lands. See if this can hold in that 17K level, hold that level, and then see what the US markets are doing if we're going to get this next 2-week potential rally, 3-week rally, or if we start falling apart. If we start falling apart, I expect this to come down even further. Let's go ahead and look at Euro Stoxx 50. Euro Stoxx 50 is holding up not too badly. You see, as you go sideways in the Wyckoff, you form accumulation or distribution ranges, in this case, distribution. And your next sideways market, remember, markets tend to move sideways 80% of the time. You got accumulation, and then you went up again into a distribution, and then you formed very briefly accumulation and a parabolic up move. But as you can see, I'm tying this together with the current box. Are you in accumulation or distribution? Very complex markets, the European markets right now, with a geopolitical space, with just a price action, and the economies in general in the European markets. But when you zoom into this, you know that you have levels. And so the important thing to do is to track these levels. Look at your key levels. You want to stay above 4,818. You want to stay above, if you lose that level, you want to stay above 4,762. Why? Because you can easily have this type of pattern, a 5-wave pattern that could break down to the downside. The key levels to break above, you need to get back above your all-time high at 51,110, okay? So we look at this from a Fibonacci perspective. Let's open this up for the Euro Stoxx 50 biggest stocks in Europe. Pull this from the fractal high to this current low, which is how I'm doing it. We're getting up to the 618, getting rejected right at the 5,000 level. Again, key psychological level, right? Look at things in $50 blocks on a lot of these assets. 5,000, 5,048 is 786, and then above that's 5,110. So you want to see if you can get back above here and come up a little bit higher to challenge this all-time high. If you start breaking down and start looking at these lower level fractals down here, if you start breaking back down below, say, the lowest fractal here, 48.18, you could bring that up a little bit to almost 48.81. You're going to be retesting the bottom of this range. So just something to watch on Euro Stoxx 50. If you trade it, the DAX coming right up to the 50 moving average, getting rejected. The DAX wants to be bullish here, okay? You had your high, you had your low. You had your higher high, you have your higher low, and this is where you're stuck. You're stuck right now. This is almost like a channel right now, okay? You're stuck at the 50. get our midsummer, get this next couple weeks, 3 weeks rally. You could see the DAX attempt to come up some more. We shall see. Maybe gives you a little bit of a pullback and then a breakout to the upside. But overall, I like trading the DAX. Fun fact, NVDA, one company, is worth more than the entire German DAX, all 40 companies. Isn't that crazy? If we pull our fib from the all-time high here down to the corrective low, the 618, 18,615 is right where you got rejected. In general, you want to watch these levels of resistance, 18,615 and 18,8. The 786 just above it. Again, potentially bullish trend here in the DAX, almost a channel type pattern, right? Connect your highs, connect your lows, almost a channel type pattern, and you're trying to bounce back up to the upside. So we'll be looking at targets if we can start flipping some of these levels, and I'll be looking at this in conjunction with the U.S. markets. Gold's doing nothing. Got asked about gold. It is constricting in our caterpillar, so a move is coming in, and if the U.S. markets rally, gold's going to move with the S&P. Key levels to watch, 2431 above you, 2277 for support. And if the markets drop, obviously, if there is no two most bullish weeks of the year for the markets and they start breaking down, you want gold to hold 2277 because my two targets for gold on the downside, as you guys know, that 2150 level down to the 2069 level for a larger base. That would just look something like this, potentially base down here, and then get your last push up after the summer top and correction. Okay. All right, guys. Hope you enjoyed the video and my unhinged ranting. Leave me your comments, questions. As always, be sure to like and subscribe to the video, and I'll see you guys on the next one. Have a fantastic holiday week, everybody.